The Reserve has announced that it has dropped its benchmark rate to 0% as of yesterday. This is huge news, and let's go over the whole scenario, what this means for everybody, coming up right after this. The channel that's all about real estate, guys. If this is your first time tuning into my YouTube channel, welcome. I post videos 3 times a week, every Monday, Wednesday, Friday. So if you're not already, subscribe to the channel to be notified of new videos. And if you get any value out of this video, hit that like button down there. Now onto the video you're waiting for. So news as of yesterday, I'm looking at it right now. The Federal Reserve cuts rates to 0 and launches massive $700 billion quantitative easing program to purchase back asset purchases, as in treasuries and mortgage-backed securities. We get so many questions from our consumers, clients, and our in-house mortgage lender has clarified this with an email that I'm gonna kind of read and highlight to you guys so it's gonna make more sense. First off, when the feds lower their rates to 0%, this is on short-term money. This does not affect the 30-year fixed mortgage, right? So when everyone says, oh, it's 0%, is the mortgage rates gonna go down? Well, not necessarily, and probably not. When they say they are lowering their short-term Fed rate or prime rate to 0%, okay, this is on short-term money. So I'm reading the email right now. It's gonna affect things like credit cards, consumer loans, business loans, auto loans. We're talking about short-term loans here, people. Now, if you have CDs or your money markets, right? Like Citibank is advertising, 2% or whatever when I put my money in a high interest savings account. Well, you can just wipe that out. That is totally gone, people. You are not gonna get good rates. Essentially what the government's trying to do on this brink of a recession is incentivize businesses to get out and start spending money, right? And not save their money, because you're not gonna get any interest essentially if you put your money into a CD or a high interest savings account. So the feds are just trying to keep money flowing through the economy, right? And if we look back historically speaking, before every recession that we've had, we've seen the feds just slash the rates down to make it as cheap as possible to finance stuff and for businesses, right? But for everybody's sake, hopefully this gets cleared up. But the way I'm seeing it right now, we're probably headed towards a recession, for the next couple quarters at least. So for everybody's sake, hopefully this gets cleared up. Stay safe out there, wash your hands, and do what you can to, obviously stop this from spreading. Let's get back on trend of the video. So on the previous video, I was talking about how the coronavirus actually lowered mortgage interest rates to all-time lows, which is true. And essentially people were taking their money out of equities and stocks, putting them in the bond market, okay, which actually lowers the yield on the bond market, which has a direct correlation with mortgage interest rates. But now let me read this email. So this is super interesting, guys. So conversely, the mortgage rates have actually gone up. Okay, and why is this? Okay, they're over 4% right now. And this is because the mortgage-backed security market, okay, you have to understand when you buy when you finance a mortgage, normally, we're gonna sell that mortgage onto the Fannie Mae, Fannie Mac, onto the secondary market. Okay, so this is called the mortgage-backed security market. And basically, this is all out of whack at this moment, okay? In the mortgage-backed security market, there is a liquidity and volume issue right now, okay? Because when the rates went down to all-time lows, we saw refinancing rates and the amount of loan applications spike. When we say liquidity problems, banks are actually running out of money to lend. Okay, so this is where the liquidity problems are coming in. So due to the massive amounts of refinance volume, sorry for looking down, guys, I'm reading this email. And so mortgage rates have spiked. My rates at Priority went from 3.125 to about 4.125% in about 4 days. Okay, our mortgage lender said he's never seen this big of a jump in that amount of time in 18 years of doing this. So what is the positive news for the home buyers out there, for me in real estate? When I see the 0% funds rate going down, okay, this has no effect to me, right? This is short-term money. We're not talking about mortgage interest rates here. So it looks like that possibly the Fed's purchasing back securities, mortgage-backed securities, and the general investor sentiment is already impacting our rates in a very big way. I also think that the liquidity issue that I brought up, okay, that our lender sent out in the previous email is getting better. And, with this huge swing up in rates last week, it gave the mortgage-backed security market time to breathe, and we're seeing more normalcy, okay? And he goes, wow, he's never seen this big of swing in rates ever in the 18 years he's been in this business. So And then he states super interesting and volatile times in the market, right? So rates are back down. What are my predictions going forward? Well, I think we're on the brink of a recession. I think it's inevitable of what's going on. A lot of businesses around me are obviously closing their doors. You know, when they have all that overhead of rent, you know, wages to pay out, you know, it's gonna hurt a lot of people. So hopefully for everybody's sake, this gets cleared up super fast. Now in my line of work in, you know, real estate, you know, what I'm seeing is obviously some people are staying away from open houses. Some people are just out of the market. You know, they're just scared overall what's going on. But also there's a ton of people that are still out there shopping for houses. We had like 20 groups through our last open house this last weekend. And a lot of people are still shopping, still buying houses. And I think it is obviously they're trying to lock in that super low 30-year fixed mortgage, which is a good incentive to get out there and shop around. But also a lot of people, like I'm saying, aren't shopping around. So I think it's actually helping the buyers that are out there. You know, maybe it's a little bit less competitive because we do have super low inventory. So it's actually kind of helping those buyers out there, you know, maybe lock in the house without a ton of competition and multiple offers. But keep in mind, guys, the housing market is still really strong. You know, what do I see going forward with pricing of housing markets? Are we going to see appreciation still go up? You know, I think it will still go up a little bit, but there's question marks. You know, it could go down in the next couple months just because we've been on this uphill trend for so long. And it's like, are we going to break through that ceiling? I don't know. Or is it going to level off and kind of, you know, go back down and then maybe go back up? Who knows, right? Nobody knows. Nobody has a crystal ball. So hopefully that kind of helped you guys. I wanted to talk about that funds rate going down to 0% because that is new news as of yesterday. I'll put the whole link of the article in there if you want to read more about it. But hopefully you guys stay safe out there, wash your hands, and we'll see you guys in the next video. Peace.